And welcome back to Halftime. It's time for the calls of the day. We're going to start off with Newmont, upgraded to outperform at RBC. Shares up just about 3%. Joe, you own this one in the Joe T ETF.
There's an obvious correlation to rising gold prices. I think most of us understand that. A lot of calls on the street for gold to see 4,000 very quickly. But for this company, they really have begun to manage the business a lot better. Shedding non-core assets, focusing on free cash flow. Stock is up 51% year to date. We own it. It's benefiting from multiple tailwinds.
All right, moving on. UnitedHealth reiterated to outperform at Morgan Stanley. Jason, you own this one. Shares actually pulling back. Our Mike Santoli mentioned money's coming out of a lot of other names into Oracle today. We're looking at UnitedHealth pulling back about 1 1/3.
Yeah, obviously it's been a very tough story most of the year, since April. But stock's down 32%. The bottom was around early part of August. It's obviously bumped then. Buffett took a position in there. I think that was helpful to the stock. Hemsley is a known commodity who did well there in his last state there. So I think the stock has a little bit of momentum here. I think Optum could continue to grow. They're managing medical costs. So there's some things that they continue to need to work out. But I think the stock could be a buy here.
Yeah, Appaloosa also in it. Michael Burry stopped shorting it, buying into it. So a couple tailwinds there. Also want to move on. Cantor Fitzgerald initiates Citizens Financial, M&T Bank, and Regions Financial is overweight. Joe, you were just talking about regional banks in the Key Area a minute ago, and you own all three of these in the Joe T.
Yeah, let's keep that graphic up as I speak to it, because we're seeing a little bit of divergence in terms of the performance for some of the regional banks. Right now, I would say the best that we have on our list is Citizens Financial. Regions Financial is right behind it. Other banks that we own, like M&T, Fifth Third, they seem to be losing moderately their positive momentum.
Do you think that has anything to do with some of the labor weakness in different regions? Because these regional banks, they obviously are very dependent on the local economy, local businesses, much more than the big banks that have things like capital markets to lean on.
Yes, I think that's fair. I think also you're calling into question the loan growth, and then the other element to it, as I said before, is you have had a little bit of rebuilding and positioning for some of the regional banks here over the last 45 to 60 days. That might need to relieve some of the stress, if you would, that you find when your positioning gets a little bit overheated.
You mentioned you were bullish on financials more broadly outside of the banks, including insurance. Progressive's price target raised to 347 from 344 at B of A. You also own this one in the Joe T.
Yeah, so let me tell you exactly what we're seeing in the insurance industry, because interestingly enough, I mentioned 23 being a frustrating period for myself, punitive for the strategy, but during that period in the financial sector, we found ownership of insurance companies, and it really was on the building inflationary story and who had pricing power. And clearly, insurance companies had pricing power, whether it was Allstate, Chubb, or Progressive. Over the last 6 months, these insurance companies have seen their momentum be neutralized, and along with that, they're beginning to see a little bit of weakening in the pricing power that they maintained over the last 2 years. So in the upcoming quarterly rebalance at the October, it'll be interesting to see what we do with the rules in terms of does it take the positions and move them to the sidelines or not, but it certainly is a weaker environment for insurance companies.
Progressive up just about almost 1% right now.